Hello, and thank you for lending your ears to Ratehub.ca's Real Money Talk podcast. In this show, we give you the real talk on all things money. We eliminate the fine print, we junk the jargon, and we explain how you can make smarter financial decisions. We're not millionaires, we're thousandaires, and we know you are too, so this show is for you. We want to talk about money because it affects everyone, rich and poor. Money shouldn't only be the occupation of the 1%, but rather the 99%. Avocado toast ain't the reason you're broke. Don't hold out lattes for paydays. Let's make money an everyday discussion.
Hey, thanks. And this is another sidebar. So this is part 2 of the 2-part series of Questrade. In this video, Scarlett and I discuss your basic questions like what is a stock, what is a mutual fund, and we go through actually buying stocks on Questrade. Know that Scarlett's opinions are that of a professional, but might not necessarily agree with those of Questrade's, and so this is not financial advice. This is not licensed or certified or anything, but it is, again, good advice worth listening to. Hope you enjoy. If you're worried about starting with Questrade, I highly recommend listening to part 1. It's a very intensive walkthrough about exactly how to sign up and answers a lot of questions that you may have. But if you don't need that, it's very simple sign up process. If you don't need that, just listen to this part, and this is actually buying stocks with Questrade. Thanks for listening. See you soon.
So we're about to fund my account.
Yes.
And so when I fund my account, I'll take my money and then put it into my Questrade account. So let's talk about, what is a stock? What's an ETF? What's a mutual fund? And like a quick breakdown of each of these.
Yeah, sure. So a stock in its most base form is just owning a little piece of a company. So let's use Apple as an example because it's a really good one that everybody knows. This is not a recommendation to buy. Our lawyers will make me say that. But so if you buy Apple stock, you are like legitimately owning a little piece of that organization. And as it grows, the value of the stock grows and you will earn money. And they also pay a dividend. So every quarter if they exceed their earnings, they will do a dividend and pay that out to all the shareholders as that's kind of your thank you for investing in them. So stocks are great.
Cool.
And then ETFs are basically a basket of stocks put together. And they usually have a theme across them. So you can have energy, you could have technology, you can have ones that follow an index. So like everything that would be in an index would be a little bit in there. And what's great about that is like some of the we call them the FANG stocks. So like Facebook, Apple, Google, Netflix are kind of expensive. Google is really pricey right now.
Yeah.
And not everybody has $2,000 or $3,000 to put into a stock. And so an ETF is a great way to have some diversification, but also to be able to afford things that might be out of your immediate price range.
I looked at the Google stock, but you're saying that I could buy an ETF then, like FANG. And so, yeah, Facebook, Apple, Netflix.
Oh,
Google.
yeah, Amazon. It's Amazon that's...
And Amazon, yeah. And so I could buy all of those companies that would otherwise be, as you say, out of reach kind of thing.
Yeah. For a much lower, much more reasonable price. And also with Questrade, buying ETFs is free. So you don't have to pay any commission on that purchase, which is wonderful. You do have to pay when you sell them. Our standard commission is $4.95, so it's a really reasonable amount, but it's a great way to invest. I buy lots of ETFs personally myself. So.
Sorry, how much is an ETF? I haven't looked it up, but
yeah, it really depends on the ETF. But they're usually kind of they keep them in the there's many. There's so many of them, but there's lots in like the $25 to $35 zone.
Okay. That's affordable.
Yeah, it's really affordable. And so MER is like the cost that you pay for the company that made that ETF for you. And you can look up those ETFs and you can see on each one what the MER is. But for the most part, it's very, very, very low, like a percentage of a percentage, very small. And you asked me about mutual funds. So a mutual fund is quite similar to an ETF, except for they're much more expensive. They have lots of.
They're much more expensive, like to buy, or the fees?
It can be both for sure, but the fees for sure are much, much more expensive because they're often you're expected to hold them for a period of time, so they front load the fees, and also they're often sold by not online discount brokerages, but by when you go see your broker, and so the broker has to be paid to sell you these.
Right.
And all of those fees are embedded in a mutual fund. So they're great products. So I don't want to sound like I'm discouraging people from buying mutual funds, but I would encourage you to research them. Find out what the fees are and make sure you understand what you're paying.
Yes.
Because you might be able to break it up in a way that you could get it at a better rate.
Because, so this ETF will have their or a mutual fund will have their underlying holdings, right? And that's sort of the basket of what is comprised of that single ETF that you're buying, right?
Now you sound like a trader. Those are exactly what it's called, the underlying holdings. Well done. It is fun to sound like you're a trader and you really know what you're doing. So these are important terms to know.
Yes. What is a portfolio?
So a portfolio is when you pull it all together, and it could actually have a number of definitions. Like I'll talk about myself personally. So I have a whole bunch of accounts. I have 2 RESP accounts because I have one for each of my children. I have a TFSA account. I have an RSP account. And then I have my Quest Wealth Portfolio RSP account as well. So I could think about all of that as my portfolio because it is, but I could also think about each of those accounts as a portfolio. So it's a little bit what it means to you, but basically it's the roll up of everything you're holding. And that's where that's where you get into conversations about diversification.
Because the goal, right, is to have a globally diversified portfolio. So let's talk diversification for a second then.
Yeah.
So what is a globally diversified portfolio mean?
So, well, first of all, let me say that I am not a registered person that can give advice on investing. So I will only talk about what it means to me as myself, and I will also say that I don't represent Questrade when I say this. But basically, when you're putting together your portfolio, you want to have a risk-reward balance, right? And a good way to do that is through asset allocation. So asset allocation is balancing how much of kinds of things you have. So how many ETFs versus stocks? Are they Canadian based? Are they US based? Are they international? Because if you can really have something that goes across many planes, your chances of good return are higher, but also if something goes awry, your chances of losses are lower and more controlled. And you kind of have the gains in one to offset any losses in another. And then eventually, hopefully, they will both slowly work themselves up and down, but netting up positive. So lots of folks get excited about things that they're holding and they're really interested in like technology sector. And then when they really look at their portfolio, they're like, oh, like, this isn't balanced at all.
Yeah, because I guess like you could over index on like tech, as you say, or mining and coal, like I guess, or something.
Yeah, like energies too, right? and different things like that. And this is the question that like lots of people want to ask Questrade, and it's the only question we can't answer is like, what should I buy? Because as an online discount brokerage, we can't give advice. And so what we can tell you is like, think about things across sectors and think about like, what are you reading in the news? We have lots of tools inside of the platform where you can look up different equities, and it will tell you. We have a tool called Tip Ranks, which is really great. It will tell you what lots of advisors on the street are saying. And interesting about that and why we chose Tip Ranks as a tool is you can Google, lots of people giving advice, but you don't have any way to check and balance, like, are they giving good advice? What do their trades look like? And so we put together this tool that tells you, in general, when you look at all kinds of advisors from all kinds of different places, what's the net consensus and how well are they performing? So does it feel like good information or does it feel like bad information?
Now, so there's a couple questions before we get into buying stuff. How much, and I'm not sure if you can answer this question, but in general, like you're financially savvy, but how much should I be investing of my, like if there's a percentage of your income you should be investing?
Okay, so I'm going to take you to my favorite business book, which is The Wealthy Barber. It's old school and it's tried, trusted, and true. And I just really think if you can put 10% away from the earliest day you possibly can, and it's something I even try to teach my kids who are like literally just preteens, you will always be okay. So that's kind of the rule of thumb that I use.
And that's 10% pre-tax.
No, I do 10% after tax because pre-tax, like that's too hard. But also, so one of the tricks that I do is like, as you move up in your career and you get a raise or a bonus or any of those kind of wonderful things, that's money you're not used to spending. And so I also try to siphon that off as investment money.
Yeah. As soon as that. So yeah, don't raise your cost of living.
Yeah. Try not to raise it. I mean, buy yourself something nice because you did a great job one time. And then put yourself right back because you were fine. You were fine yesterday, You'll be fine today. And future, you will thank you.
And active investing versus passive investing. Tell me the differences.
Yes. Well, so active investing, like, we have a mobile phone or a mobile app. And so we're always encouraging people, like, don't be a passive investor where you put your money in like one time during RSP season and then ignore it. You need to check, you need to look, you need to make sure that the things that you bought are doing well. You need to stay a little bit up on your news. And, what if if you bought something and then the company is in serious trouble, like you have to be active. This is your money.
Yeah.
It's your real money.
Right. So what is passive investing?
So passive investing can be a couple of things. So passive investing could be a robo where you don't want that responsibility and accountability. So I would say that's good passive investing where you just keep doing your deposits and you let the professionals take care of it for you based on your risk. And then there's passive investing where, you put things in and you check it now and again, but you really are in it for the long haul. So which is, to be honest, in many ways, the way that I invest. So there's, I buy things that I love. Because I really believe in them. And I'm like, I own part of this company now a little bit. And I want to be there in 10 years to see how it's growing and, to really take advantage of all the wonderful things that company's doing.
Okay. Yeah. And that passive investing, so there's the famous, couch potato investing, I guess. And couch potato investing is kind of like a passive investing style.
Yeah.
Okay.
Yeah.
And I found this online where it's the couch potato portfolio is an indexing strategy requiring only annual monitoring and rebalancing, but offers significant returns in the long run. And it sort of sounds like my kind of style.
Yeah.
So so what I did was I looked at some model portfolios of couch potato investing on Money Sense.
I'm a big fan of couch potato and model portfolios.
Okay, so on Money Sense's website, and on the personal finance, like the Reddit and the Redditors on our Personal Finance Canada and on the Facebook community groups on personal finance, everybody talks about Vanguard ETFs. Is like every single person recommends VGRO. So I was like, you know what? This is something that I should just probably have in my portfolio. So that's where I thought I'd start. So how do I buy VGRO?
VGRO.
Okay.
So let's get into the trading platform.
Okay.
So first and foremost, right now where you have landed, which is where everybody will land when they first log in, this is kind of your Questrade homepage. And every day, I hope when you log in and through your phone as well, you would see how your investing is doing in that sort of top left quadrant, and then how your account is, and it will show you how much cash you have versus the market and how you're doing. So let's move into the trade platform. And to access that, there's two ways. You can either click your account where it says self-directing TFSA, or you can click the green trade button at the top.
Okay, so just because it's pronounced, I'm going to click the green trade button at the top.
Excellent.
Okay, so we've landed on the trading page.
You're on the trading platform. So normally your trading platform, you would have a little chart in the front there that's showing you how you're performing, but you haven't bought anything yet. So there's no data for us to display for you. So this will change quite quickly. So let's get started. The very first thing you want to do is search your symbol. So right here in the top right where it says search a symbol, you would put VGRO in because that's the one you're looking to do.
And I'm so I'm going to search for the symbol. What's the symbol, Scarlett?
VGRO.to.
And yeah, but what is .to? Here it is.
Oh, so yeah. So a symbol is basically, it's just like the 4-digit, sometimes it's a little more code that you put into for the symbol. You actually can search the name of the company and we'll provide you with the sort of the ticker. Mm-hmm. But with ETFs, that's a little trickier because they're often called like Vanguard or SPY or something. And then whatever the ETF is, it's the company name first. So
okay.
In this case, you already knew what you wanted to buy, so we'll just go with
Vanguard. So, and then that's the symbol is like what I see across like CP24, like these like BNN kind of news networks, right? Okay.
Exactly.
So I can look cool in front of my...
That's right.
Okay, so now we've pulled up this VGRO.to. It's So who is Vanguard actually too? Maybe I can...
So Vanguard is an ETF manufacturer. So they build these ETFs for you to buy.
Okay.
And they manage them. So what you can see now is really important. So up in this section, you see that the current price. So as soon as you put in a symbol, we do what we call a snap quote for you, which means we go to the exchange and we get the immediate price. So it's not on a delay. That in this red hot second, it's worth $32.01. Gotcha. And then you can see that it's been down a little today. So the red underneath there will be red or green and tell you how it's performing. And then you've got these charts. And the chart, you can change the time. So right now you have it at 1 day, but you can look at it over 5 days, a month, 3 months, just to sort of get a feel for how it's performing. Mm-hmm. And then underneath we have key statistics. And these can be pretty complicated. And as a new customer, we're going to send you a video to explain all this stuff to you so you know, but pretty much is telling you what you need to know, like what it opened at today, what it closed at yesterday, 52-week high, 52-week low, market cap, those kinds of things to just give you a real feel for the value. Mm-hmm. And that this would be a combination, because it's an ETF, of the underlying value of the ETF. So whatever it's made up of, it's how this ETF is performing across all of those combined. Very cool. So if you are going to buy, if you go back up on the screen, mm-hmm. You see the buy button.
And just click buy.
Just click buy.
Okay, so it's come up now, and it's asking me limit order or market order.
That's right. Okay, so a limit order is basically you are the driver. You decide how much you want to pay. So you know right now it's worth $32.01, but maybe you think it's going to go down later today and you would like to make a bid for $31.50, or you think I don't know. It could be any amount, to be honest. Yeah. But if you aren't in the zone, it's never going to happen. So you want to make sure you put something that you think is plausible if you really want to own it. So that's one way to do it, which is you choose your price. The second way is to do a market order, which just means you'll pay the current price. So it's fast, it executes right away. Mm-hmm. Because you're not trying to hit what we call a strike price, which is the price that you put in. Okay. So there you go.
I'm going to click market order then, because I'm just going to buy it at the 32.01 for now.
Great.
Right. Especially it's down, right? Okay. So
yeah.
And then next. Oh, and then I can. Okay. So now I'm how many shares would I like to buy?
Now, an interesting thing here for you to know is that this is a Canadian stock. And so you are looking at your money in Canadian dollars. So you have the full $1,000 available to you. So I would just remind people, say you are buying Apple as an example, or a different ETF that's on a US exchange. we will show you in your buying power. You can convert it to show you how much cash you have in US dollars, like what the conversion would be.
Right.
So that you don't have to do, mental gymnastics of how many
Excellent.
you can afford.
Yeah.
We'll provide that for you. So how many are you thinking, Tom?
Well,
How
only
are you gonna
because
start this
I
adventure?
want to buy a couple other things. Let's say 4 of these.
Excellent.
Okay. And so this is now, it does the math for me. It tells me my $32.01 now is the estimated cost. So estimated cost of order is 128.04. And why is it estimate that?
It's estimated because you're doing a market order. So while we're having this conversation, the 3201 could change a little.
Yeah.
So one thing you can do is, do you see up at the top there, it says snap quote?
Yep.
Why don't you go ahead and hit that?
Oh, and it updated to the exact second.
To the exact second.
Okay.
So you can just see if things are moving very quickly. But for most investors, we can talk about timing the market versus timing the market. 1 cent here and 1 cent there is not going to change your retirement. So you'll be okay.
So I'm going to hit.
And estimated also, we have to factor in, this is a free ETF, so you don't have commission. But if it was a stock, you would. So that's why it's also an estimate.
Okay, right. So now I can hit next and buy my first ETF.
Yeah, you'll get a confirmation first.
Okay, so
you always have another step to be able to be comfortable. So this is to review your order. So you're seeing you're buying 4 units of VGRO. It's a market order. It's got your account description, the account, because if you had multiple accounts, you could adjust if you were oh, that's not the right account. And then it's going to estimate your total for you, and your commission is 1 cent. Now let's talk about that for 1 second, because It's a free ETF. Why is it 1 cent? At Questrade, we actually do charge ECN fees, which is the exchange's fees.
Okay.
So whatever the exchange is charging us, we charge you. And often it's very, very, very small unless you're trading in what we call the pink sheets or OTC. So those are like penny stocks. It can be quite expensive.
Right.
And so in this case, you will pay 1 cent to make this purchase.
Now I'm all nervous. No. Okay. That makes sense. So I now just place order.
Yeah.
And order executed. Very cool.
There you go. And now you're going to see you've got a portfolio value in your account holdings. Exactly. Congratulations.
Up. Yes, thank you.
Congratulations.
So now, well, there's a couple things we should talk about too. Timing the market versus timing the market. And dollar cost averaging versus lump sum. And let's just quickly summarize those 2 theories for me.
Yeah. So timing the market, let's talk about investing versus active trading for one. Okay. If you're an investor, you are, for the most part, always going to be better off having time in the market versus trying to time it, because the market moves all over the place. Like you can just see in your little chart, it was last week, it had a dip, but it's already in a recovery phase. And so the chances of you're trying to hit that if you are not watching the stock market very regularly is pretty low. So you're in the long stretch better off to get your money into the market and get investing if you have a long horizon than you are to try to find that dip. Mm-hmm. And so I think I can't give advice, but if I was talking to my family and friends, that is the approach that I personally take, and that's kind of what I recommend. The other way, you really, really need to know what you're doing. It's harder.
We've had over 40 podcasts now, and of the ones with guests, pretty well everybody has said, including the Canadian couch potato himself said, just don't time the market, just keep investing in the market. So
there you go. I feel very validated.
Yeah, yes.
Excellent.
And lump sum versus dollar cost averaging.
Yeah. So, I mean, at the end of the day, you should do what you can afford. And it is a lot easier to afford small amounts over time than to accrue a lump sum, right?
Yeah.
But But you have to look at your life. Like, say you were a real estate agent or something, and you are paid, on a commission base when something comes due. You live a lump sum lifestyle, versus if you are a salaried employee, you have a different experience. So it's very personal, and you really just need to do what works for you to make sure that you're looking after your future.
I like it. Yeah.
That's how I feel anyway.
Well, I mean, I think the most important part is like, okay, so this Vanguard ETF is $32, and I bought 4 of them for $128, which was pretty much the amount of money that I spent on, a slinky eaves trough for my backyard as I try and get water away from my basement. So, this is buying for my retirement, and that's buying for my house troubles right now. But, both money well spent, really. Okay, so.
But I bet if you went through your credit card, you could kind of do a little red line of like, maybe not all of that was what I needed.
The Mary Kondo style, yeah. Like I don't. Oh, exactly. This was a bad expense. I did not. This purchase did not elicit joy. So, okay. So, Vanguard offers an equities ETF called VXC, which is an all-world, low-cost. And globally diversified. So, but it excludes Canada because I'm supposed to not only invest in Canada, right? I should have money elsewhere too. So I'm just.
It is a good idea.
Okay, so I'm going to look up VXC, and there it is. I haven't accounted like, okay, I have $1,000 right now, but I'm not. I don't know. There's a couple other things I want to buy, so I'm trying to consider all this.
So this one's worth $50.
Yep.
But it's and 50 cents. Oh, and it's down. So that's an interesting one for you to pick for us to talk about, because now you have to think about down is a great time to buy and the worst time to sell. So you're buying. But do you believe that this is going to come back? And with ETFs, I mean, it's not like you're buying into one company. It's a lot of things. So it's quite a.
And like historically, so if we talk about risk and like losing all my money here, I'm not buying like a GME or AMC. And so did you want to talk about like, and I also saw something like over 90 years through, from the 2008 recession to like the Great Depression,
even the 1920s. Yeah.
Like the average rate of return of the S&P 500 is like 9.8%. So, and if these ETFs are diversified for me, I can relatively safely, I can feel relatively confident that this is fairly low risk for me to be buying.
Correct.
Right.
And you are not retiring in the next 6 months.
No.
So you have room for some up and down with recovery, right?
Yeah.
Yeah.
Okay, I'm gonna buy a couple of these.
Oh boy.
And so now I'm gonna do a market order again, because it's low. It's down from its higher position anyway. So. Okay, so, and I'll buy 2 of those. Look at
And then there were 2. Oh, but look, you're already down.
I'm already down.
The market's going down.
Sell everything! Okay.
But check back tomorrow, because that's how it goes.
Actually, we should.
Today's a good day to buy.
We should. When I was speaking with a family member about this particular podcast recording, she says, you should absolutely do a follow-up. So maybe in 6 months or a year's time, we can go back and follow up on these original buys and see what's happening with them.
I'll come on your podcast anytime, Tyler. You just invite me back.
I love it. Thank you, Scarlett. Okay. And then, VCN is for Canadian equities.
You've done your homework. So the more aggressive ones are going to be made up primarily of equities, and then you move down into like they'll be more made up of like bonds and things that are a little more stable.
Yeah. And so as I age, impossible, I know, but as I age, you should almost have more like equities or stocks when I'm younger, right? But then as I age and I'm looking for more stable, like retirement and steady flow, that's when you sort of reallocate your portfolio to, a higher percentage of bonds or something, right?
That is a common practice for sure. But also you have to see where the market is at that time.
Okay, yeah, I like that advice. We've got one more Vanguard ETF to buy, and it is their Canadian bonds. So because to have a little bit of stability, I suppose, and that's VAB.
It can be your anchor.
Yes, or oh man, that $1,000 is running out so fast compared to what I want to buy. So there's a couple.
Now you're already excited about your portfolio, and
Absolutely.
You're already dreaming about how it's going to grow. I can see it.
This is the VGRO is what Reddit and Facebook tells me to buy. Everything else is the Vanguard couch potato portfolio. So
that's the beauty of self-directed is you can choose. You can have whatever you want.
So if I wanted to buy stocks now, and I looked at MoneySense and their top 100 dividend stocks. And so, I work in the insurance. I write a lot about insurance and specifically life insurance companies, and they're generally speaking pretty good dividend stocks. So what is a dividend stock?
So a dividend stock is a stock that you're going to get to participate in the dividends, basically. So every quarter, the company will publish its earnings, and they will allocate their dividends, and shareholders will get their cut, if you will. And basically, it's just another form of income. So there are investment strategies that you would invest heavily in. I think they're actually called income portfolios. And that's one way that you're making money is through dividends. So that not only does the stock go up, but then every quarter you get your dividend.
You get a little bit of, that's pretty good.
And I'll just show you a little trick. In the ones that pay dividends, in the key statistics, it will tell you what the last dividend was. And it also has a thing called dividend X date. And what that means is you have to have owned the equity by this date to participate in the next quarter's dividend. So if you read like the day before earnings that they're going to have a great big earnings week, you can't buy it and expect to participate in the dividends. You have to have held it by the X date.
Okay. So this is just a stock. So my sister works at Sunlife, so I think she'd be mad.
So there you go. You're buying things that you have faith in.
Yes. So I'm also just going to place a market order. It's seen some spikes and everything else, but I won't be able to participate based on what you were saying earlier. I won't be able to participate in the X date because it's already September, right?
You'll get the next one.
So the next one. Now, once those dividends are paid, how do they get paid out? Do I get a check in the mail, right?
No, it goes into the account where you hold the stock. So let's say this one paid you, I don't know, $3, for example. After they have their earnings and they release their dividends, you would see a dividend in your account, and it would be for $3 from this equity.
And then, so from there, and then is it automatically reinvested for me?
It is not, but it could be. So we have a program, it's called DRIP, and you can sign up for it through, I can't remember in the navigation, it's quite easy to do. But basically you can sign up to say that every time you're earning from that, it will reinvest it. But what you have to think about is it's basically just like new cash in your account. And it comes in the currency of whatever that equity was. So for example, if you were buying Apple and Apple paid you a dividend, it would come in US dollars. So it's adding to your US account. And then you can decide, like, do I want more Apple? Do I have enough from Apple? Like, obviously a dividend, you have to have a lot of stocks to be able to equal up to what it's worth. So it kind of sometimes can work for you depending on how much you have in your investing. If the drip will work, and if it won't work, then you just have the cash and you can pick something.
Mm-hmm. So we keep talking about Apple, and we've talked a lot about, what's
No, Apple's down today too. Look at that.
Yeah. Over a month or whatever, it's come
Yeah.
down. But, you said it already that invest in what you love and what you buy. And it's kind of interesting when we talk about Fang earlier too, because right now I'm working on a MacBook Air. And my phone, I have an iPhone. And my kids both play on iPads. And my wife and I this week subscribed to Apple TV so we could watch the morning show, which is like mind-blowingly good, and I had never watched it before. So I really think, and then the other thing that I like about Apple TV is that, like, if it's doing, I mean, they've always sort of done good quality content, so I'm justifying my purchase here.
yeah, of course.
But it seems like every room I go to in this house is Apple. So I'm gonna buy. How much money do I have left?
If you just click buy, it will show you right away. That's probably the fastest.
Oh, okay, right. So I'm gonna buy Apple. I'm just gonna do a market order. And that's on the NASDAQ. And then so I have $500 left. Oh, and now it says in USD because this is on the NASDAQ exchange.
That's right. Apple is on the NASDAQ, so it's in USD. So we will automatically do the conversion for you because you're in a registered account, so you don't have to figure out how to do that.
Okay. So let's just do two because.
Sure. And this one, you'll see that you've got $4.95 as your commission because it's not an ETF, so you'll pay a commission.
Cool. So I'll buy that. This is just so easy, and it almost feels like a video game to me.
Oh, it's not a game. This is your real money.
Yes, that's true.
I'm watching. But to be fair, we talked earlier, it's not hard, right? Like,
right.
Is this as hard as online banking, do you think?
So far, this is easier.
Like, I honestly think people feel really intimidated because the market, if you watch The Wolf of Wall Street and all of these shows, and it's like trade floors, buy, sell.
Yeah.
And really, platforms like ours have democratized the ability to be in the stock market, and you can do it from your phone in your home, and you can participate and keep all of that earnings yourself.
I think it's great for like even just teaching my kids now. Now I can sort of show them this, and like they understand line graphs. Well, at least my 7-year-old does. Maybe not my 5-year-old, but I feel like, and I could ask him too because he plays on the iPad. So hey, what do you like?
I did the same for my kids. I put aside some money that we've invested for them, and I even talked to them about their RESPs. Like, what do you love? You're the future.
Yeah.
I'm going to be long dead when you're holding some of these things.
And maybe
and what do you love? Those are important.
I can maybe talk him out of buying Roblox gift cards and Roblox stock. And finally, the one more that I definitely want to buy is that my father-in-law always talks about. He works in natural gas, and he always talks about Enbridge as a great pick. They have a bunch of stuff. So I am looking at a ton of Enbridge stuff here, but I don't.
Yes.
Yeah. How is this sorted?
That's where sometimes you need to do. It's usually sorted by market cap.
By
market capitalization. So the biggest companies first.
Okay.
And so if you click on it, then you can see the description better, and you can also see like in the chart if it makes sense, and if you go down and read the key statistics, it will tell you. And just while we're on the key statistics, like this is probably a nice lesson for some folks. Like if we think about some of these stocks that have become very popular, the meme stocks, a really good thing to do is to look at what the 52-week highs and lows have been, and ask yourself the question, was this company worth this much money yesterday that all of a sudden it's worth this much today? What happened in that organization to change that? Is that sustainable change or growth? Was there a merger, or did it just get meme popularity? And it's, these are the lessons we really want people to think about. Like, it's not a game. Like, this is your real money. This is your real life. And yes, some people will make money off of those because they know what they're doing and they can get in and out quick and they know how to time. But for the average investor, like, you want to really be prudent and understand what you're buying.
Yeah.
Don't buy things you don't understand.
Yeah. Like, so maybe searching for a symbol to do my investments, while it's easy, I should probably really know the symbol and have researched it ahead of time.
Yeah, and at least the stats here will show you, the charts will show you, there's at least some basic things. Like, if it looks strange, you should ask why.
So,
like, it was very low yesterday and all of a sudden it's up here. What happened?
So yeah, I'll just pull up that, just because we're here, and might as well, and we can talk about it here. But here's GME.
Yeah, so look at like 1 year.
A year. Yeah. And we'll pull up the line graph over the 1 year mark to really see what's happened with GME. And I can see, right now, if I buy it, it's $188.65. And I can see basically this, the big peak.
There's the big peak. And then, now it's a little bit of a sport up and down, right? But
yeah,
the intrinsic value of the organization is the intrinsic value of the organization.
And to your point, here's the 52-week low is $9 and the 52-week high is $483. So this is a volatile stock. So when we talk risk, this is a risky stock.
Yes.
Yeah. Yeah.
Yes, it is.
And then I won't spend all my money, but which is fine. I did want to pull up Google because my whole my house is on, I have like Google Home everywhere and stuff like that. Now, Google as a stock, though, like I bought Apple for $291 and Google wants $2,824.
Yep. So you're not buying Google today.
No.
But do you know what? You actually already have bought Google today because I am like 99% sure it's already in VGRO.
Okay. When I think of big companies, like Apple's a $1 trillion company. So why are they 291, whereas Google is 10 times that price?
So Google has just chosen not to split their stock. So sometimes what happens is they will split a stock in, it can be half, it can be quarters, it can be however many they want, to make it more affordable because they want to put more into the, more availability into the market. Some stocks like Google and Amazon have chosen not to do that. And that's, of course, their prerogative to do as the owners of the company. But what happens in those cases, say you did own a share of Google and it's split, you don't lose anything. You just have two worth the same value. And then two start to grow instead of your one growing. So a split is not a bad thing or a good thing. It's really just an affordability. And it happens all the time. It's not an unusual thing.
So, and so now what do I do? So I've bought some stuff. I have a portfolio. So I feel pretty good about it.
Now what you should do is you should download Quest Mobile on your phone. Okay. Because it will look and feel very similar to what you see here, but then you can check on the go and see how your stocks are performing. And every day it will tell you how you're ahead of me. It will tell you how your portfolio is doing and your individual assets. Right. We call them positions. Now you can talk like a trader. Your individual positions.
Individual positions. I like it. Okay. And so I'm done though, right? Like I've invested in the market and we've set up and we're rolling. Okay.
You've done very well.
So now it's time for our rapid fire questions so our audience can get to know you a little bit better.
Oh dear. Okay, let's go.
So you can take off your like college degree cap. And this is just who you are. And fire off the hip. I might delve deeper into them, but
sure.
we'll see. So rapid fire question number one: what is in your wallet?
In my wallet, I can tell you, it's right here.
Okay.
I keep a very small wallet. I almost never have cash. I am the worst for having cash. I have my driver's license, my health card, my debit card, my library card. I'm a huge consumer of the library, the public library. I love it. And my credit card. Also, I'm a mom, so I have a Band-Aid and a lip balm.
What is a book everyone should read?
Oh, gosh. Well, a financial book everyone should read is The Wealthy Barber. I really think it's a great book. And then in terms of like just for pleasure, I read a lot of books. One of my favorite books is called Bel Canto. It's a little bit of a weird book. It's about a hostage situation, which sounds like it's going to be really dark and negative, but it's actually a lovely, lovely, almost with a romance to it story. I love it. It's one that really stuck with me.
Can you spell that for me?
Yeah, it's Bel, like B-E-L, Canto, C-A-N-T-O.
Okay.
It just has a very nice way. The writer tells the story in such a beautiful way that you just feel connected to everyone. It's a character story.
I like that. What was your first job and what did you learn from it?
My first job? Oh my gosh, this is going to date me a lot. I worked at a video store for a long time through my high school years. Yeah, I know. Can you imagine renting videos?
Yeah, I worked at a video store too when I was younger. So, what did you learn from it?
Oh, I learned the value of having my own money and the power of that.
Oh, how so? Do tell.
Well, just having your own paycheck and my parents were very lovely and generous, but it was very nice to have my own decisioning. And I decided I wanted a car. I lived in Pickering at a time where, oh my gosh, I'm really gonna date myself. So Pickering didn't have a public transit system. It had dial-a-bus. And so you would call the bus and then you would have to go where everybody else was going until you could get where you were going. And it was this ridiculous system at the time. And so I wanted a car. And my parents were like, yeah, we're not buying you a car. And I just loved this. I could choose what I was going to invest my time and my money in. And I was in control. And I was like, this is how I want to live my life. I want to make my choices. What's important to me.
And you're still doing that today?
Oh, yeah.
Yeah. Love it. What is a commonly held belief about your industry that you or your space that you're in, let's say, that you passionately disagree with?
Oh, that it's really hard and complicated and not for everybody. I think there's just been all this fear put around it that you need a professional to tell you what to buy, that you need a portfolio manager, and some people for sure should and do, but you saw today. It's not nearly as hard. And I wish that there were more of these demonstration videos to show people the idea of going on a trading platform, just saying that out loud sounds really scary and frightening. Yeah. And now you've done it, it's not. So how do we make more people know?
Yeah. I will definitely be using this much more often. Absolutely because it's just fun. And then I can see money growing. So that's a very nice thing. If you had a billboard on the side of the highway,
yes,
okay, and it was yours, and someone just came along and said, "Hey, we're going to give you this billboard. What do you want to put on it? What do you want it to say? What's the word or the motto that you want to get out to the world so that everybody reads it as they're driving by? What would it say?"
I think it would say, "Be kind. Everyone's doing their best." I think we've all had a hard 18 months and in varying degrees. And I think that my best doesn't look like your best, but that doesn't mean it's not your best. Yeah. And it doesn't mean my best isn't my best. And I think we all owe each other some kindness.
And I think, perspective, I think is important. And you don't know what other people are going through, or that it's, you may have gone through it, but, they're going through it now or something like that. So kindness. Yeah. In fact, our last podcast with Will Reynolds was he turned down $50 million. And the whole podcast really is about how kind he is. and how much it's rewarded him just by being kind. So I like that. That's nice. What's your number to walk away from it all, live financially independent, and never worry about money again?
$8 million.
$8 million. That's pretty specific.
Have you never had this like drive home fantasy in the car of like, how much money would I need to win to like pack it all in? And it's so funny because my husband and I are very different. He was like, I would retire instantly. And I was like, I would still work, but I would do different work. I would do unpaid work because I'm a person that likes to work. But I just feel like that's enough. And I'm also, I would be a very unhappy person to be like wealthy and then like my circle around me is not. So it's just enough money for me to distribute between like my best friends and my family and, you know, pay off my mortgage and do all those things, that my life wouldn't be extraordinarily different. But we would all just be elevated enough that it would be nice and some pressure off folks. And
it's really nice. Yeah. Like when you, you know, best friends taking them on, it's like, you know, they might still have to work, but at least, you know, you could say, you know what, I'm just going to pay for your vacation and we're going to go to Hawaii or the Bahamas or, you know, wherever. And don't worry about a cent.
Wouldn't that be beautiful?
It would be. Yeah.
Gosh.
What do you want to be known for when you die?
Oh, that's a hard one. What do I want to be known for?
Yeah.
I want to be known for someone who did my best in every situation that I could, that I was the best mother I could be, the best partner I could be, the best friend, that I brought my best self to work every day, that I, you know, coached and trained people the best that I could. And it's not always perfect. Like I make piles of mistakes and do lots of stupid things. But I feel like I've always been a very genuine person that tries hard. You know, I want the world to be a better place. And the older I get, the more philanthropic I am with that, for sure. Like I think that's a corner you turn at a certain age.
Yeah. Appreciate that. So Scarlett, if people had questions for you or for Questrade or any, like, what is the best form of sort of communication to find out more about either?
Yeah. So, I mean, our website, Questrade.com, is chock full of information for sure. You can reach out to us on social media. We're on Facebook and Instagram and Twitter. And if it's about your personal account, please don't ask questions with your numbers and things in there. The call center is available for you. We have live chat. We have really, really great, brilliant, hardworking staff that can answer your questions. We're here to help. Like we want people to invest well. We want you to do great with your future.
Cool. That's
Call
awesome.
us.
I think you've helped set me up. So I appreciate it. And maybe we'll call it back in a year's time or something like that. So
Excellent.
Thank you so much for your time today, Scarlett. This is huge. I'm on the path to building wealth.
Congratulations. I'm happy for you.
Thank you for listening. Thank you to Beat Chemist for providing us with our music. Find him on SoundCloud. I want to sincerely thank you, the listener, for taking the time out of your own day and investing it in yourself to get smarter about money. Head over to Ratehub.ca to learn more about making smarter financial decisions. If you want to thank us, please leave a review on Apple Podcasts or follow us on Spotify. Thank you for listening. Let's help Canadians choose better with their finances.
And now, for
The views expressed by guests are their own, and their appearance in the program does not imply endorsement of them or any entity they represent. Views and opinions expressed by Ratehub employees are those of the employees and do not necessarily reflect the views of Ratehub Inc. or any of its sponsors or officials. This is for general use. We're not certified or licensed advisors.
Yeah, we just don't want to get sued.